Hi, kids. Time to talk about oil and gas on the Equity.Guru Investor Roundtable. Not oil and vinegar, which is what Galen is mixing down there in the basement for his salad.
Yes, it's a great salad.
At least you're eating something healthy
Well, of course, after the scones, I got to do something.
instead of
Balance it out.
the thorium brownies.
Yeah.
And that's
Yeah.
Michelle in the penthouse living at large because he's a wealthy resource man. And then Chris is frozen
Yes.
because he's tied up at the moment. But he is on the site elsewhere talking about oil and gas. We're gonna poppity doppity over three of these pups. Doug Bartoli is the CEO in Calgary for InPlay Oil. That would be IPO on the Toronto Exchange.
Interesting choice.
Sure is. Southern Energy is SOU on the Venture Exchange under Ken Atkinson there in Calgary. And then Vancouver-based Garth Johnson is the man, the CEO for Pulse Oil, PUL on the Venture Exchange. And the man we call VV will start the process on oil and gas.
Yes, sir. So a lot of wild action on oil and gas recently. I don't have the chart here of natural gas, but we actually took out highs not seen since 2008, I believe it was, on natural gas. So gas has been exploding higher, obviously, due to certain geopolitical situations. And oil is also part of, I guess you could say, a macro geopolitical play right now. And, we've heard recently that the U.S. was releasing a lot of their emergency reserves as a way to try to bring down the prices of oil. But on the other side, you have the Saudis and OPEC Plus saying, hey, why don't we cut down our production so there's going to be less oil, which will cause the prices to rise. And the opportunity is going to be very volatile oil and energy markets. And this video is coming out, I believe, on the Monday. But this week, when this video comes out, there could be a big blockbuster news out of Europe, and that is the EU is actually planning on an embargo on all Russian oil, and apparently they're waiting till after the French elections to do so because they're hoping, of course, Emmanuel Macron's there and he can back this up as well. But JP Morgan is saying if this happens, oil prices could shoot up to a record of $185 per barrel if the EU acts to impose a full immediate ban on imports of Russian oil. So if you get some crazy move like that, the whole energy sector and the energy space is going to do quite well. We've talked about this recently that the Toronto Stock Exchange, the TSX, and the OBX, which is in Norway, both of those markets are heavily skewed with energy stocks. The currencies as well, the Norwegian krone and the Canadian loonie, are positively correlated with oil. And basically the Norwegian and the Canadian markets are the only markets that I can think of that have printed record highs in 2022. No Asian markets have done it. No major Asian markets have done it. No major European markets have done it. And of course, the American markets have not hit record highs yet. But the Canadian markets have, and the Norwegian markets have, and it's largely to do with oil. So if this, blockbuster move happens, again, on the geopolitical side, it's probably prudent to have some sort of oil play in your portfolio, whether it be a producer that pays dividends, whether it be some sort of ETF or a royalty and streamer. We're taking a look at things a bit differently because, of course, if oil does spike up to 185, a lot of these juniors are going to go through the roof, in my opinion. And we're looking at three companies here: Pulse Oil, Southern Energy, and InPlay. Pulse, small market cap here of 15 million. Southern has a market cap of around 53 million, and then InPlay is a bit more bigger or larger there with a market cap of 375 million. So, a lot of room to the upside, not just on the not just on the company fundamentals, but the macro fundamentals if oil prices are going up higher, because I believe a lot of these companies will be making nice revenues with oil priced at 185. And that's crude oil, Brent crude, but all the other oil prices will be affected as well by a move like that. So Let's start with a small one here. Pulse Oil, as we've talked about them, I believe in a previous investor roundtable with Drew Cadenhead and Garth Johnson, leading a team to basically take advantage of what they think is a great opportunity here in oil acquiring and value building, aimed at acquiring great projects, managing risks, and maximizing the rewards. And remember, there was a little, yeah, there it is. There's the quote. So their goal is to take advantage of the current window of acquisition opportunity to build the portfolio of well-located, productive, and profitable properties and position themselves for exponential growth. And they have picked up a property here in near Edmonton, the Big Array, and they want to BBB or build back Big Array. And that's their, it's going to be 100% owned oil and gas asset, which is preparing for the next step of Pulse's enhanced oil recovery or EOR program. So that's the project that they are sitting on. And I believe they are doing some raise right now to raise some funds. So once that is done, then they have the money to initiate catalyst for shareholders and get the project going there at Big Array. I almost said build back Big Array. Southern Energy is another company that we've talked about in the past, a producer that is in the Louisiana and Mississippi region. And if we take a look at how much they are producing right now, they're currently producing 2,050 barrels of energy per day. They do have reserves. They have money as well, and they are looking to grow their reserves. I believe they did put out some earnings. Yes, they did report fourth quarter and year-end financials on the 18th of April, so just a few days ago. They got $1.4 million of adjusted fund flow from operations, $4.8 million for the full year of 2021, and an average production of 12,753. I believe that's a meter. That's the gas, I guess. But 2,126 barrels of energy per day. There we go. They changed that number there for us. So you can take a look at the earnings. Net earnings of 10 million. Net debt reduced by 8.7 million. So this is a play that is already making money, and they're hoping to grow. I think the most interesting thing for this play for Southern Energy is actually it's the fact that they are near US LNG terminals. And this is going to be very important for the future, because if the Europeans want to get away from Russian gas, the next option is liquefied natural gas, and they can get it maybe from Australia, maybe other parts of the Middle East. But from what I'm hearing, they have agreed to buy American LNG, which means the Americans will have to, produce a bit more. And this creates an opportunity, I believe, for a lot of U.S. LNG producers. So I think Southern Energy might be one of these long-term asset plays that's banking on the new world, you could call it, the new geopolitical world, if we are sending an LNG up to Europe. And then finally, InPlay Oil here is a Canadian company, IPO.To. They have assets near Edmonton. Here they are, Pembina, Williston Green, and the East Basin, near Calgary as well, I guess. So right smack down in the middle between Edmonton and Calgary there in Alberta. And they also had a record-setting year for 2021 with a record production of 5,768 barrels of energy per day, a growth of over 45% over 2020, record adjusted fund flow, record low net debt, record operating income profit. And for this year, assuming that U.S. West Texas is 91.50 or $91.50 a barrel, and remains around $90 for the remainder of the year. And, we're well above, well, not well above, but we are above $100 per barrel in West Texas. They are looking at around 9,000 to 9,400 barrels of energy per day. So quite a substantial growth, almost double their production for the previous year. So it's all about growth, for a lot of these companies, especially with the high prices that we are seeing with oil, and of course the new new world, I guess. A lot of people are going to be looking at untapped oil and gas reserves in the U.S. And of course, I know the opposite case is, of course, the clean energy play, but as of now, it looks like we still need our oil and gas, and Europe will definitely need some sort of gas to stay warm during winter and to light their stoves if they do cut off from Russian gas as a whole.
Man, it's nuts the way this could
Yeah.
go. Galen?
Well, the Russian conflict has certainly thrown a wrench into the works in terms of the oil and gas sector and the world demand and how everyone's getting their resources. So it's basically kind of skewing the natural progression of what the sector was heading towards. So right now we're seeing a ballooning in price based on panic and people fearing that they're not going to be able to get their resources in the short term, i.e. Europe getting the gas to keep their homes heated through the winter. This is a short-term thing. It is big and very important and will play a large part in how the industry plays itself out. But there's some long-term trends that I think people need to be really aware of that have changed the face of oil and gas permanently and will continue to do so as we go further down the road. One is the change, the energy transition. Companies are becoming more ESG minded.
Right.
M&As are being more focused on picking up ESG friendly companies. So those that are just sort of like still drilling the core services and not really trying to convert might get left by the wayside. There is and will be a replacement, not completely, but to the point where we will see a plateau in demand, not necessarily a continued increase. So you need to be ultra aware of where you're throwing your money. Is
Right.
it in a company that's forward thinking and has the capability of being picked up further down the road from another larger company who's looking for an ESG oriented entity to throw into its portfolio? Because many of the large companies now are trying to diversify what they're doing environmentally in order to look better to shareholders and also to cover their carbon credits and other types of things that they're falling prey to, I guess you could say. The other thing is that in the year 2008, the world took a crap, and unfortunately, the economy went to crap. And this was, of course, due to the Lehman Brothers and all those other jerks playing with their money in the world economy. But what it ended up doing was causing a huge depression in the oil and gas sector to the point where there was a giant layoff of service providers, of workers, and labor force. Now, admittedly, the price of oil right now especially has beaten previous highs and is riding an all-time high. But as of the beginning of the year, we have yet to see 50% more, like there's only 50% of those workers have been hired back to work. This has left a tremendous gap in terms of knowledge, skills. We have an aging workforce that's moving out. So there'll be a difficulty for these companies to ramp up production. So a lot of them are probably going to be looking at optimizing their sources that they have right now rather than exploring new ones, because that requires skill. And there's not a lot of it out there right now in terms of people willing to be in the sector. So we have to watch for that as well. I think the last thing to consider is this conflict in Russia. How far will it go? What will be the implications and ramifications after everything settles down? Will we enter another Cold War? Will that mean that all the resources that we used to enjoy getting from Russia, from Gazprom and other sources, will that now permanently be cut off or embargoed or banned? We don't know where that's going to sit, because that will definitely affect anybody else within the sector that's hoping to sort of bridge the gap at this point in time. Companies like Southern Energy, they've proven themselves to a certain extent to have a bit of a savvy position within their sector. They've got a great positioning in terms of assets and location. LNG is going to be a continuing thing. It'll be a fair amount of time before that eases off, if ever. And same with oil. It's not going to completely go away. As much as we'd like to think it is, there's too many things that are built with petrol-based materials, plastics, everything.
Exactly.
So I mean, it's going to be a long time before we see that phased out entirely. And as I said, if ever. So what you got to look at now is your smart play. Look at companies, as I said, that are forward thinking, that can be adopted into a strategy from a larger major that's looking to develop more friendly projects. Look for companies that have something in the ground that they're producing. You may get more growth potential out of a company that's greenfield, but there's less potential of them getting added into the mix down the road because of the way things work. Basically, so play it smart. You can play the sector itself and go in for ETFs and such, and just try and invest in oil and gas itself. But remember, right now it's very volatile. And at this point, being hugely affected by geopolitical situations, which could change on a moment's notice. So keep aware of that. This would be a trade more than a great investment, or a long-term investment. Not a great investment, long-term investment. So those are my only provisos for getting involved in this type of a situation with oil and gas. Yes, things seem to be going good right now, but we're in a very temporary situation. Oil could go to 138. As put out by J.P. Morgan, who will probably play both sides of the fence like they do with silver. But this could change entirely if everything works out for the Russian problem. I doubt that it will, but it could. There you go.
Provisos. We had provisos and 2 craps.
Yes, there we go.
So it's clean.
No F-bombs. Just
no
poops.
F-bombs, just 2 craps. I don't mind that.
Yeah.
Vishal, chart time, and then we're going to get some do-si-do thrown around.
Really interesting on the charts. There's just a lot of action on some of these juniors here, but we'll get to that in just a second. I just want to show you guys the chart of U.S. oil or West Texas crude. Of course, it is back above $100 a barrel. Previous shows, we were watching this support here at around 95, and we bounced once and we bounced twice. Nice, large, engulfing green candles, which basically eat up all the previous red candles and smaller body candles, and it's a very strong sign, just telling you that the buyers are holding the line there, to borrow a term from Braveheart and Wall Street Bets, using the Braveheart meme, holding the line there. And I've drawn out another triangle sort type trend line that has multiple touches, which we did actually break out of on the 13th of April. So to me, on a technical basis, I am expecting higher oil prices. Whether we bounce right now, whether we fall a bit lower to the trend line before breaking out and making new recent highs for 2022. I can't tell you that projection or which way it's going to go, but from this breakout, as long as we're above $95 a barrel now, and again, a lot of people I think will also be watching $100 just because it's such an important psychological zone. I'm expecting higher oil prices as we head into the remainder of 2022. And let's hope, it's just a nice and steady rise higher rather than, hey, we're blocking all oil, even though we don't know where we're going to get it from. There might have to be some fuel rationing, but it's the best thing to do. And we see a giant spike up to 185. Hopefully it's not like that. But, if you're invested in oil, I guess you might be happy if that happens, because that might mean, some of these plays are just going to take off like a rocket, and they already have, but in a nice, steadier approach. InPlay Oil, we were watching this resistance at 370. That's now taken care of, and we're just riding this uptrend higher and higher. Oh, it would be funny if it was at 420 today, on 420, but it's at 436. Actually broke above $4.20. And if you go to the long-term chart, I mean, there's a lot of room to the upside, folks. This is a company that was trading at one point, more than $1,000 per share here on the chart. But or actually, I think that might have been previously. It looks like there was a period between 2016 here, maybe, where a different company took up this ticker. We've had that issue before with a different play where they didn't like the trading view chart. So maybe that's what it is here. But a major breakout here for InPlay Oil, and to be honest, there's not much resistance to the upside. This has a lot of room to go, and it really is about if this company can expand and they have the reserves, and if they can. They're making money at over $90 a barrel, right? So if the oil prices stay relatively high, these guys are going to do quite well and meet all their targets for 2022. Southern Energy, and I haven't actually touched anything, so I haven't drawn any of these lines. This was exactly what we were looking at, I think, the last few times we were looking at Southern. And it's funny because I had this drawn out because I believe we had this breakout the last time we talked about Southern. And I was like, okay, here we go. Maybe there'll be a pullback back to this breakout at 50 cents before we shoot out higher up to 75 cents, which is the previous highs here. And that's exactly what has happened. So we're now just waiting for a breakout above 75 cents, which could give us a run up to $1. And then from there, you know, you're talking about new record highs if oil prices just keep on going higher and higher. But if we don't break above 75 cents here, there is a chance that the stock could pull back. So I'm going to get rid of these lines, which we drew out the last time we forecasted the prices. And I'm going to say, you know, there could be a pullback here to what was once resistance, now acting as support around 60 cents before we break out above 75. But as you can see right now, sellers, maybe people taking their profits, are cashing out here at around 75 cents. So that is the big resistance zone to watch, whereas 60 cents might be a nice opportunity to buy the dip on Southern Energy. But I mean, these guys have really taken off. We were talking about this company earlier this year around, 30, 35 cents, and they've almost doubled in a couple of months' time. So, you know, kudos to the team there. But I do have a feeling that, you know, a lot of people are sort of recognizing the LNG play and the fact that, hey, if the Europeans need LNG, they're going to get it from the Americans. And, you know, a company like Southern is well positioned near those LNG terminals to take advantage of such a situation. And then, you know, PUL.V Oil, which we are, again, waiting for that funding or that raise, but the stock has just been ranging essentially since June of 2021. June 21st of 2021 has just been ranging here between 4 cents and 8 cents to the upside. Just waiting for a break in either direction, but if the stock does come back to 4 cents here, which it might do, because it's at 5 cents right now, it's likely to see a bid because it's such a huge support zone, and especially, you know, for a company that is an oil play with the name oil in the company's name, I think a lot of traders will look at that, especially if the prices of oil start to spike out higher. But just like last time, huge resistance zone is here at 8 cents, and if we get a break above that, you have your nice little cup and handle type pattern. It's a bit more elongated, but if that occurs, I mean, we're looking at a move up to 15 cents or 17.5 cents from that level. So the charts are looking constructive. The structures still look pretty good. Southern has had the biggest move recently with, since the last time we talked about it. InPlay Oil just keeps on trekking along with its major breakout, and PUL.V Oil could be finding a nice little support test, which will see bidders jump in and take positions at around 4 cents per share.
Pretty cool. And there's a lot of intangibles coming up in the sector and with the specific companies as well, when you consider the Pulse financing and some of the other elements with the Russian decision coming up with the EU. So what does that mean for you and your $7,500, Galen?
Well, I'm probably going to be looking more at the ETF situation rather than independent producers at this point in time. I'd like to see the situation normalize somewhat before I start playing with the guys that are bringing it out of the ground. There are several ETFs that you can play with in Canada, starting with the Horizon's Crude Oil ETF. Then you also got the Horizon Beta Pro Crude Oil Leverage Daily Bull ETF. There's all sorts of names here.
So if you're really bullish on oil and you want to be leveraged 3 times.
Yeah, exactly. Yeah, that's the one you want to play if you want to lose all your money. Perfect for Robinhood investors. I would probably just go with the Horizons one because it's just sort of nice and subdued and just goes along. I mean, I'm always apprehensive to a certain extent because anybody that has an ETF usually plays the backside. So they're making money no matter what happens. But you know what? I'd probably put $3,000 in the Horizon ETF. Let that go.
That's the one I think you're talking about.
Yeah, the Horizon Crude Oil ETF. Is that HUC?
Yeah, HUC.
HUC.
Yeah. And
Hook.
yeah, Hook. and let it ride. For right now, I'm probably just going to stay off the production end of things and let things even out and find out what the world situation is going to be.
All right. I'm going to speak for Chris and say that he's going to go 2,500 for each of the three companies, just
There
for
we go.
S's and giggles, because he's not here to defend himself.
Yep.
He's frozen. That's right. 7,500. We always give away his money.
Yeah.
That's actually my money, but it's his money.
Yeah.
All right, Vishal. So we got 7,500 from the Frozen Man, and we've got what'd you say, $2,000 or $3,000 on the $3,000?
I went $3,000. Yep.
Yeah.
All
I
right.
agree with Galen. I think it's important in this period of time to have some sort of oil play in your portfolio, right? Whether it be an ETF, maybe a larger cap dividend paying stock, ExxonMobil, Chevron, very popular with some people. And let's not forget Occidental Petroleum, right? Is what Mr.
It's what I've had in my
Buffett,
portfolio forever.
That one's been in your portfolio forever?
Yeah.
There we go, right? So Galen is investing just like Mr. Warren Buffett, who, keeps acquiring shares.
Going along, man. Going along.
Oh, good.
Yep.
You're in the market for one of those oligarch yachts when they go up for auction.
Yep.
Nice. Good for you.
Right. So, I mean, and again, that's a whole different story, right? Everyone was waiting for Warren Buffett to announce, is he going to buy something like GE or General Motors, just like he did in 2008? And it turned out to be Occidental Petroleum, and people like scratching their heads saying, what? Why is he buying
we don't see this.
oil and gas?
He figured it out.
But
I'm sure that's a dividend provider.
they are a dividend provider. Yes, they are pretty big. And, I believe he is also still holding his Suncor, right, which is another large Canadian energy company, of course, tar sands in Alberta. Suncor, but yeah, they are a dividend-paying stock. So have some sort of dividend-paying stock in your portfolio, or some sort of ETF, like Galen said. I'm gonna be like, oil is going up because of geopolitics and also the whole commodity run on inflation. So I'm gonna be a bit more, I don't want to say I'm being risky. I think it's a good bet, just betting on higher commodity prices in general. So I'm going to be putting 2,500 in Southern Energy, just because I think that LNG play is a geopolitical macro play that you could hang on to for quite some time. I'm going to also put 2,500 in an up-and-comer producer here in Canada in IPO, in InPlay Oil. The chart's doing well. It looks like they're surprising on earnings, as we know they are, because I did go through their earnings on their presentation. So I'm going to put 2,500 in an up-and-comer, and maybe this is even a buyout candidate right down the road. Who knows? And then the other 2,500, I think I'll follow Galen and put it in some sort of oil ETF like HUC. But on the Canadian markets, we're spoiled, right? There's so many energy companies on the Canadian markets, and if you want to be a trader like me, right, trade the U.S. Canadian dollar. Just go long the Canadian loonie, or go along the TSX, because both of those are correlated with the price of oil. So in a way, if you want oil to go up, bet on the Canadian loonie to go higher, because it usually follows what oil does, unless the Bank of Canada does something to interfere to say, no, we don't want a strong loonie, we want a weak loonie. But usually the correlation is, it's like a 95% correlation with oil and the Canadian loonie. So many multiple ways to play oil as a Canadian, but for the Roundtable, 2,500 in InPlay, 2,500 in Southern, and then 2,500 in the HUC ETF.
There you go. And we'll be circling back on Pulse once the financing
Exactly
is over with.
That's what I was going to say.
Just another week or two, and then we'll be back to take a closer look. So that would be, that's Pulse, which is PLU on the venture. They're going through that. Southern Energy is SOU on the venture, and IPO on the Toronto exchanges. InPlay Oil with Doug Bartoli in Calgary. Actually, Southern Energy is in Calgary, and Pulse is here in Vancouver. So you've seen the dough flying off the shelves here at the Simpson Mythical House of Cash, and that's what's going to happen. But we can't guarantee it. So
you're a Bitcoin millionaire, Rob.
We can't guarantee results. So please do your own research, your own homework. We can't promise you anything. And also past performances. Definitely, this is a great time to say past performance does not guarantee future results, because the performance lately has been pretty damn good.
Yeah.
So do your homework. No guarantees when you watch the Roundtable, but we can, we usually help you out. As you saw from Vishal there, we pretty much kicked ass, nailed it on the Southern Energy earlier and also on oil and gas. So we'll talk to you. I'm sure we'll be talking to you again on the very next exciting installment of the Equity Guru Investor Roundtable.